Good evening. Today I want to talk to you about the monetary policy course followed by the Reserve Bank of India. I have already commented on what the policy is doing, and today I want to talk to you about what is going to be the future course towards the next 6 months. You must be aware that there are a lot of developing countries and middle income countries which have started to increase interest rates. Even some developed nations like New Zealand have increased interest rates. Among our emerging economies, Brazil and Russia are important who have increased interest rates. Denmark is already increased interest rates. Now, there is a huge clamor around the developed world for higher rates. I am sure the Bank of England will increase rates by January. This is because inflationary expectation in England is running at an all-time high. All this means that money is going to become tighter. In fact, it is expected that the US will start to taper its bond buying program from November. All this has put heavy pressure on the Indian rupee. As soon as this monetary policy was announced, the Indian rupee cracked and went down to 75 rupees 50 paisa yesterday. The rupee at 75.50 means that the bond market is not very happy and with the way the Reserve Bank is handling its policy. What it means is that it expects dollars to go out of India because interest rates in India are very low and they expect interest rates in the rest of the world to increase. And there is an expectation that there will be more outflow of money from India. And that is why, in spite of India having more than $500 billion in reserves, we are seeing the rupee crack and crack big. Also, the bond rates, the rates at which the union government borrows from the open market, has steadily climbed. As soon as Saktikanta Das announced his new monetary policy, the bond rates yield spiked above 6.3 and the RBA's target is 6% because the bond yield rates go out through the roof. Then the union government has to spend more money paying interest on bonds, and this will put the budget haywire. The current governor, Saktikanta Das, has been an yes man. He has been extremely accommodative and supportive of the government to a point where he has ignored inflationary expectations and data on inflation. What is inflation? Inflation is nothing but erosion in value of money. Prices of all goods and services in India have been going through the roof. Ever since this government came, it has adopted the consumer price inflation, the CPI, as the main source of target inflation targeting. Inflation in India is ruling between 6 and 5.5% for the last several months, while Saktikanta Das has been talking about bringing it, saying it will taper by itself. But even more dangerous is what is happening in the wholesale price. The wholesale price index has been in double digits for the last 4 months and is expected to be in higher even this year. Already, cooking oil prices have doubled in 1 year. Gas prices have gone up by more than 50%. Petrol and diesel prices have gone up. Even prices of cereal, according to the Food FAO, a UN organization, are at a decade level high. This means inflation, as felt by the common man, is extremely high and is way above 10%. This will mean that the Reserve Bank governor needs to act. To compound the crisis, India's coal production has suddenly dropped, and there is a severe shortage of coal in all our thermal plants. The coal alone, thermal fired power plants, contribute to nearly 60% of all our electrical demands. Since Coal India is a government owned publicly listed company, they are not able to produce enough coal to meet demand. Prices of coal in Indonesia and Australia, which are the two major suppliers of coal worldwide, has gone through the roof. From $60 a ton, the prices have reached $200 a ton, primarily because there's a huge shortage of coal in China, which means China is pushing to buy any amount of coal at whatever price. This has made import of coal very expensive for India. There are reports that there may be trouble in electricity generation, and therefore electricity may be not available for small and medium manufacturers who do not have their own generating capacity. This will affect the productivity and the economy in the coming season, which is the most important season for consumption in India. For this is the festival season. If consumption in festival season drops, India's GDP will be in serious trouble, and it looks like there's a shortage of coal. Inflationary pressures are not only due in India alone, but this is happening worldwide. Crude oil futures crossed 83 yesterday, and the spot prices of Brent crude, which India imports up to 85%, is at $81. The cheaper rupee has meant that the price of petrol and diesel will have to go up. Some places in India, petrol has crossed 110 rupees a liter. An average Indian makes about 300 rupees a day. If the cost of fuel is going to be more than 33% of his daily wage, then you can see how costly fuel has become in India. Most of India's fuel cost is because of the regressive indirect tax laid on it by the central government, especially in form of duties. This is pushing up the pressure of petrol and diesel to extremely high levels. Since diesel is used for transportation, most of other commodity prices are also rising, and even products such as paints, which use crude oil as a basic input, are also going to be in trouble and will be forced to increase prices. All this means Shaktikanta Das has to change his monetary policy from that of a loose and accommodative to a tight and raise interest rates. But market participants feel that interest rates will not start to climb immediately and he will wait for some more time. It is expected that he will wait till the first quarter of 2022 before increasing interest rates. This means India is going to have a loose monetary policy for another 7 months. This will fuel inflation and even increase it further, making life difficult for you. It is better that you are forewarned. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification. नमस्कार, मेरा नाम आनंद श्रीनिवासन है और मैं एक पर्सनल फाइनेंस कंसल्टेंट हूँ। मैं 2 यूट्यूब चैनल चलाता हूँ पर्सनल फाइनेंस के बारे में। एक मनी पेज तमिल में है। मेरे बहुत से दोस्त बोले कि मैं हिंदी में एक चैनल शुरू करूं, तो मैंने एक पैसा बोलता है नाम का एक हिंदी चैनल शुरू किया है। मैं पर्सनल निवेश के बारे में ही बात करूंगा। आप उसको सब्सक्राइब करें, अपने दोस्तों को शेयर करें। अगर आप हिंदी नहीं जानते हैं तो पैसा करें। जो आपके दोस्त हिंदी जानते हैं उनको सब्सक्राइब करने के लिए आग्रह करें। धन्यवाद, नमस्कार।